Hey, it's Dario, and I know it's a long time since I didn't post a video, but today I would like to share with you a little bit of my 2023 and what I'm going to do in 2024. I will share with you the expenses that I incurred in 2023, a little bit of my salary since I now work, so you also have an idea of someone that lives in Switzerland if you maybe want to come in Switzerland or you are just curious. I will share with you the expenses. I will share with you how I track my expenses, and then how I budget, and also how at the end of the month, everything that I manage to save, how I'm planning to invest it. Because since now I've been at university, I just had a plain investment, a little bit thrown like that. But now that I'm starting to work, that I started to work in August of 2023, I want to be much more selective and much more organized also with my investments. So let's start with the expenses and with the income and saving and all of that. I will not concentrate too much on this because I would like to talk about more about investments. So first of all, this is how I track my income and my expenses and my savings. This is not me. I copied this Excel sheet from someone else. So I will not share with you directly the sheet. I will put in the description the link of the video of a guy that explains how to build this. It's an 8-hour video, I think. I simply copied it. You can also buy it, I think, for 40 francs or $40. So yeah, you can buy it or you can copy it, but I cannot share it with you because of copyright and also because it's not right, I think. So this is a little bit of what's going on in my life, basically. So first of all, I live with my girlfriend. We live in Bern. That's a fairly big city in Switzerland. Um, and this is our income. So in 2023, she quit her job and she was looking for another job. So that's why you don't see a lot of income for her. But this is my income of 2023. And but more interesting, I think it's a little bit of the expenses. So uh, in general, we totaled a 40,000 income and 20, 12,000 francs of, sorry, we totaled 34,000 of income, 35,000 of income, and 22,000 of expenses. I don't track like a business. So I basically track the money that comes in and the money that comes out, and everything that I have is my savings. I don't track it like a business because, for example, here you don't see taxes. And even if I saved for taxes, it would be in my net worth until I pay for taxes. So in Switzerland, we can pay, for example, my girlfriend pays 3 times a year. It's an advance payment, and at the end of the year, we do our taxes and we get the money back, or we pay a little bit more what's missing. So everything that they ask me to pay in advance, I don't include it in my net worth, but everything that I save to pay for taxes, it's included in my net worth, simply because it's easier like that. So I don't track credits, I don't track accruals and all of that. Um, so yeah, that's more or less that. I just wanted to say that because it's not a precise accounting like a business. Also because I don't have crazy numbers. So what it's important for me, it's how much money I make, how much money I spend, and more or less how much money I save. Even though it's fairly precise, it's to the cent. So this is actually how much money we currently have in our bank accounts this year. So this was at the end of 2023. Um, anyways, um, right now let's go to December to see the total savings. Yeah, so basically this is the total savings that we had at the end of December 2023. What happens is that I receive my income at the end of the month. I keep it in a separate account, and then at the first of the month, I switch it, and it becomes income that I can spend in my tracking sheet. And then at the end of the month, we do basically this to zero out everything. So everything that is remaining goes into our savings or into a savings for future expenses account. Um, and basically, yeah, savings for future expenses or general savings. Um, and then from general savings, from time to time, when the general saving is big enough, it goes into the investments. Right now, I never transferred, until now, I never transferred anything from general savings to investments. I'm doing it right now with you. I waited to do this video at the start of the year. So it's fresh. It's a lot of, kind of a lot of money that I have to put in. So let's see together how much money I have to put in. There's not much to say about how much money I spent and how much money I saved. Basically, that's it. Here also you can see a tracking. Let's put it again for the total year. Yep, okay. Tracking, you can see fun and vacation. We spent a lot more than we thought. I don't remember why. Every month we go through why we spent more than we should have, but right now I don't remember why. I should go back into the months to understand. Um, and here also it's 400% of my budget because I had to buy a new phone. So basically my phone just died one day, it couldn't charge anymore. So I quickly went to buy the wireless charger and a new phone and try to transfer it as quickly as possible because I was um, I, I was afraid that it could die and never charge anymore and I would lose everything that I had. Um, so yeah, that's basically what what we had. This is also a lot of money because in our we have a camper van that we converted into a camper, um, and here it's a lot of money because we installed heating into our camper, so it's quite a lot of money. But we don't have a budget for that because it's too difficult to budget for that. But now also in 2023, we want to rebudget a little bit because these are very rough estimates, all of these. So we want to adjust a little bit that. Housing, this is going to probably increase a little bit because now they increased from April 2024, our rent increases. So yeah, groceries, oh, we did very well with groceries. We have a budget of 400 a month, I think, something like that. It was a little bit lower in 2023. Now with a little bit of inflation, it went a little bit up. Health, my girlfriend had a surgery, so that's why it's a little bit more. Here I had to buy some pills, but basically it's just our insurance here. Um, Phone, I already said that. Transport, um, my girlfriend had to go um, around Switzerland with the train, so she spent a little bit more than planned. Eating out, well, we are very good with. Oh no, I am very good with eating out. I don't spend that much. I used to spend a lot when I started to work because the kitchen was closed in the office, but now that it's open, it's fine. Eating out together, we spent 200% of what we should have. So this is how our net worth grew. This green here, it's our collective net worth. This is mine, this is hers. Of course, until I really started to work, it was more or less flat. And then I started to work and it started to really, really ramp up. Um, and what are the saving rates? So the savings rates are very, very high for me. But because we live in a small apartment and we try to spend as minimum as possible, trying to still live comfortably, um, I managed to save quite a lot. It's quite a lot, 55%. I think it's quite a lot, especially if you have a car. We spend a lot of money in gas station. How much is that? 600 francs in gas station from August. a lot of money to keep the camper. So this is also um, oil change. Well, tires not, because we already changed them before we started this tracking sheet. So yeah. Um, okay, let's stop with the income and expenses and all of that, and let's go right into investment, which is what really I wanted to talk about. Um, investment for the investment portfolio, for the investment Excel sheet, I think I will put the Excel sheet into the description if it's easy to do so, probably with a Google Doc link. Let's talk about this. So how do I track my investments? Every month I make a screenshot of my investment portfolio, and then from there I just do transactions and I keep track of the transactions that I do for the month, and basically the entire portfolio updates automatically. What I do is basically change these weights here um, to what I'm looking for, to my target, and everything else updates. Also, these here, these prices here are updated automatically. Not this. I will talk about this in a minute. But these prices are all automatically updated. Um, and they are all here. So this is everything that I have, and then these are the prices. I do it with this tool from Excel, so stocks, and then you can just refer to that cell and say price or currency, and it works pretty well. This here, this is the composition of these funds from Morningstar. Let's talk a little bit about my investment portfolio. You can see that it's divided into the pension. This is my third pillar in Switzerland. So in Switzerland, we have first pillar, second pillar, and third pillar. Second pillar, I don't have it right now because it's a company employment pension. I don't have it because I'm too young. First pillar, I do have it, but I don't know how much money that is because that's the social pension. I could estimate it, but I don't want to do it right now, maybe in the future. And then third pillar is a private pension that it's tax exempt. So everything that you put into the third pillar, you can discount it from your income and don't pay taxes on it, and you pay taxes only at the end when you receive that money. Um, then the second part is stocks. Basically everything that is stocks. I don't invest in single stocks. I invest only in ETFs, so in exchange traded funds and passive ETFs. And then I have the bonds part also with ETFs, and then I have the cash part. I don't have any precious metals. If I had, I would have a section for it. And I don't put jewelry into the investment portfolio. I don't even have jewelry, but if I had, I wouldn't put it. I have a watch, but it's not that expensive at all. Uh, so, but as I said, even if I had it, I wouldn't put it, probably, unless it's like over 5,000 francs, probably then I would put it. But it's so difficult to sell that I wouldn't put it. Also, my camper van, it's not here because it's too difficult to sell. It's too difficult to estimate the value of it, and it's just an hassle to do it, and I don't see the benefit of it. So this is basically the screenshot. Every month I do a screenshot and then I freeze everything. So this is what I had in December of 2023, and this is what I had in November, and so on and so on. At the end of the month, I put here in CHFO, that's francs, cash, others, how much money I put into my general savings. And then this goes into here. And then here I see everything that I have to do. So this is to do in francs or to do in shares. So how much shares of this portfolio I have to buy. So let's talk more in deep about my portfolio. So my pension fund is composed like this with index funds. I pay 0.39%, here you can see that, to maintain this portfolio, but the index funds themselves don't have any expense ratio. They do have some of them have an expense when you buy it and then when you sell it. But I'm not sure. I didn't understand. I should ask FinPension. FinPension is the app that I use for my third pillar. I don't have any affiliation with them. I'm not sure if these expenses are included into this 0.39% because this is what FinPension charges me to keep this portfolio, to keep the account open in general, the portfolio open. But I'm not sure if these are included. Anyways, these are less than 0.1%. So it's a fairly cheap portfolio. I mean, even if you compare it with an iShare MSCI World, it's 0.2% the the expense ratio. So it's double, but I get all the tax benefits. So it's not that much at all, at all. It's very cheap. So I invest in large caps Switzerland right now. In small caps Switzerland, we are at a 40% Switzerland. And then I invest in world. This is not hedged. This is hedged. And then I invest in small caps. And then I invest in emerging markets. Um, this is this also I did an analysis on the weights per region. These are, by the way, the regions from Morningstar. This is how Morningstar, the regions of Morningstar. So how Morningstar sees the regions. I wanted to do it by country, but maybe then it's too much, and I don't really need it. What I want to do with this FinPension thing, this FinPension portfolio is, I've seen that 40% in Switzerland is a lot of money. It's a lot. Uh, Swiss investors tend, well, generally everyone tends to invest more in the countries they live in, but there is no reason for it. So US investors, listen to this, there is no reason to invest all your money in the S&P 500. You don't know which country will be best performing in the future. So there is no reason for me to invest a lot of money in Switzerland. Even though I have to say I did some simulations, and with the past data, I've seen that Switzerland tends to lower the volatility of the portfolio and increase its efficiency. So I do want to keep a fair good amount into Switzerland, but as I said, I need to decrease this a lot. So I want to do it with you. All of these weights are already done, but so that you see how I use my Excel sheet. So I wanted to put this target weight at 5%, and I wanted to put uh, this target weight here also at 5%. And I wanted to put this one at 0% because it's hedged. I don't want it. And then the rest in world, everything here. So, so how much money that is? 51. So that's 49 plus this one, so that's 69. Let's do like this so that I remember. Oops. 0.49. Let's check if everything is 100%. Yeah, perfect. Okay, so basically I'll do it like this to rebalance everything a little bit and don't expose myself too much on Switzerland. I don't have to buy and sell these individually. I just change the portfolio with these percentages and then I put in the money and then FinPension does everything by itself. I mean, I pay for it, so. And then also it rebalances. So if you think about it, 0.5, 0.4% expense ratio to rebalance everything, it's very good. Then let's talk about my stocks portfolio. And I have to talk about my stocks portfolio and my bonds portfolio, so section a little bit together because I have to talk about my objectives. So my objectives are in about 3 years, more or less, 3 to 5 years, to, to build a new camper van. That translates into 50,000 francs of money that we have to have. I didn't account for inflation because in Switzerland, I don't believe it makes much sense. 50% will 50,000 francs will translate into 50 3,000 francs in 3 years, in 5 years. So it's not that important. Um, More or less 50,000 francs. But then we also want to buy a house, and that is in between 5, 4, 8 years, somewhere there. But it's a goal that I don't see really important. So of course it's important, but it's in the sense that if we don't reach it, it's fine. We don't need it. But how much is that goal? That goal is 150,000 francs for me and 150,000 francs for my girlfriend. So that translates in a total of 175,000 francs to have available in more or less 3 to 7 years. So 150,000 in more or less 6 years, let's say, an average of 6 years, and 25,000 francs to have in 3 to 4 years. That means that I have to be heavy on bonds because stocks, I can only invest in stocks if I have a horizon of at least 10 years. What is good is that to buy a house, I can also use this. Of course, I can use this. And I don't have a problem in using this if I have it. But it's important to know that I can also use this because you cannot withdraw the money from the third pillar just like any other investment. Because of all these tax benefits, you can only withdraw money when you are in pension or if you need to pay for a mortgage or if you buy a house. So uh, that means that I have I can withdraw money from this. It's also important to notice that if we want to rent the house, then it's not a primary house anymore, a primary residence. That means that we cannot use this money. So I wouldn't rely too much on this money, but it's nice to know that I have it, at least I have some access to it. But anyways, that also means that I cannot rely on these two investments anyways, so I have to be somewhat heavy on bonds. Um, it's also important to know that this is not the portfolio that will guarantee me to have that money in 5 years. What's going to guarantee that to me is my income. So I have to save. So the savings will go into this investment, but anyways, I have to save. Now, let's talk about bonds. Unfortunately, I cannot buy Swiss bonds. I would love to buy single Swiss bonds, maybe with an expiration date in 2027 or 2028, or even, yeah, 2028. But I cannot do that because Interactive Brokers, the broker that I use, doesn't give me the chance to buy Swiss bonds. It gives me the chance to buy European bonds, so Italy, Germany, France, Spain, and all of that, and also the US, but it doesn't give me the chance to buy Swiss bonds. And now, when it comes to bonds, you could invest in European bonds and then hedge yourself, but I cannot buy hedging certificates on Interactive Brokers, and also it would be very complicated. So, at the end of the day, my options are either buy ETFs on bonds, or if if I could buy ETFs that have an expiration date, so I bonds, for example, these are US I bonds, but hedged, uh, or just buy unhedged. But buying unhedged, it's very risky because I have to buy the house in Switzerland. So if it was only the camper van, I wouldn't be so afraid because we will buy the camper van, first of all, probably in Germany. We will buy the track in Germany. And also all of the things to build the camper van will be bought in Europe, most likely, because in Switzerland you cannot find almost anything. Um, but when it comes to the house, I have to buy the house in Switzerland and on the Swiss market. That means that all of the inflation and all of the housing market dynamic is Swiss, and I cannot buy that with euros, and I cannot be uh, unhedged into euro and then expect to have a certain amount of money in the future, because that doesn't work like that. If the euro drops 10% in respect to the Swiss franc, I'm lost. I lost 10%. All of that to say that these are all the options that I looked at and that I had to discard because they don't work for me. So I had an aggregate bond hedged in francs, a global aggregate bond hedged in francs. I had these euro government bonds not hedged. I had this corporate bond hedged, but the hedging is very expensive right now. It's around 2%. So it doesn't work. So the hedging basically it's the cost of hedging is more or less the difference in interest rates, because the franc is so strong, especially in comparison to the euro. It's not worth it to hedge. So I decided to buy short-term maturity ETFs that invest in Swiss bonds. So these are these two. So 20% on one, 20% on the other. Here, I also decided to buy a 30%. I'm very happy to have found this 30% corporate bond ETF that invests not in Switzerland, but in bonds um, released by international companies, but in Swiss francs. So that means that I'm completely covered with the currency, but that also means that I can be invested and exposed to the international market. Of course, the majority is still Swiss companies, but even Swiss companies, they are so heavy on international market that the Swiss market is very small. And then I wanted to try more than invest. I wanted to try these I bonds. So one is treasury and one is corporate. These are bonds that have an expiration date. So at the end of 2027, in December 2027, these ETFs will be canceled from the market and all of the money will be given back to me. So it will just be delisted and the money will be given back. And the bonds that are inside these ETFs have an expiration in 2027. So from January 2027 until December 2027, I think, or September 2026 and September 2027. Anyways, around that year. And then the excess, so when a bond gives back the money, if it's in January, they will reinvest it into short-term corporate government bonds. Sorry, not corporate, government bonds. And then at December, they disinvest everything, they sell everything, they list the ETF and give the money back to the investors. So yeah, this is my strategy. The strategy for the stocks is more or less to reach an equally weighted portfolio that is not really equally weighted, because I still want to expose myself more on the US. So I thought about this a little bit, not a little bit, actually a long time. I did some analysis and I questioned myself into why should I invest in an MSCI World that invests more or less 70% of the capital in the US or in North America, but in the US specifically. That doesn't make sense to me, because if we cannot predict the future, we cannot also predict whether the US will be the country that will lead the stock market into the future. And if you think that the US market should grow more than others into the future, everyone else is thinking the same, and they already bought enough US market to grow the prices enough to be aligned with other comparable countries and regions. So at the end of the day, I do want to keep myself as equally weighted as possible, but I'm also afraid of being equally weighted, because I see everyone else more exposed on the US, and I'm, of course, a little bit afraid. So I decided to go 40% on the US, and then basically 25% on Asia and Pacific, 25% on Europe, that means equally weighted Europe and Asia Pacific, and then 10% emerging markets. Then we will see by region with the Morningstar divisions. What is also to notice is that some ETFs are US ETFs, some others are European, and those that are European are from Luxembourg. So how it goes in Europe, if you receive a dividend from an ETF that is in Luxembourg, sorry, not in Luxembourg, Ireland. These are all in Ireland. If it was in Luxembourg, I would pay, I think, 15% withholding tax from Luxembourg for my dividends. And then I have to ask in Switzerland at the end of the year to give me back this money, and I don't want to do that. When it comes to the US, if I were to invest into a European ETF that invests in the US market, the European ETF would pay itself 15% of withholding tax if it's domiciliated in Ireland or Luxembourg. If it's domiciliated in France, for example, it would pay 30%. So that's not good. But if the ETF is domiciliated in the US, of course, the ETF itself doesn't pay any withholding tax in the US, but gives all the dividend to me, and then I have a 15% withholding tax in the US. But that 15%, I can ask it back at the end of the year in Switzerland, which is something that I cannot do if I invest in the US market through a European ETF. Even worse, if I invest in Luxembourg, in a European ETF in Luxembourg that invests in the US market, there the ETF would pay 15% and then gives me the dividend, but I pay 15% withholding tax, and then I have to ask it back only that less 15% in Switzerland, so it doesn't make sense. So what happens here is that the US ETF doesn't pay any tax. I receive the dividend, I pay 15% to the US, then as I said, I receive the dividend, I then declare it in my tax form, I pay what I have to pay in Switzerland, which is based on my income, on my total income, let's say 20%, and then I ask back that 15% that I previously paid to the US. That can only happen if I pay withholding tax for at least 100 francs. If it's lower than 100 francs, I cannot ask back that money because they just don't want to work for less than 100 francs. But that doesn't mean anything to me because in the future, I will certainly have more than 100 francs in withholding tax. To know how much withholding tax, how much dividend, sorry, I will receive, I can use the IC tax, IC tax. This is this one here. This is a tool that we can use to check the taxes that we have to pay, because even if the ETF is accumulating, we have to pay taxes on dividends, because in Switzerland we don't have any capital gain tax, but we do have taxes on dividend. And so even if it's accumulating, we have to use this tool and declare how much money we would have received if that ETF was a distributed. So let's say we take this one, let's copy the ISIN, let's put it here, and that's it. So we say how much we have, when we had it, if we don't put anything that assumes that we had it for the entire year. And so it appears that this one didn't receive any dividend, I think. Let's put 100 just to be sure. No, it didn't receive any dividend. But let's take this one. This one sure did receive dividend. Also because in the US there is no accumulating. But even, as I said, even if it was accumulating, it would still show me the theoretical dividend. Let's see. Okay, 3 francs. This is already converted into francs. 3 francs per share. So that's how much money I have to declare into my tax form. Um, because, of course, interactive brokers will give me the dividends that I actually received. If I have this one, or let's say this one, let's take this one. Does this one pay dividends? Let's see. Yeah, okay, let's say this one, 78 cents, 79 cents per share in 2023. This one, interactive brokers will tell me, no, you didn't receive any dividend from this ETF because it's accumulating. But theoretically, the companies inside the ETFs did give dividends. So I have to go into this platform, take out the dividend, and put it into the tax form. Goes the same with bond ETFs if they are accumulating. So this is how I did. And let's see the allocation per region. As you can see, I'm very heavy on North America right now, which is not good. I don't want this because it doesn't make sense to me. I also don't have a lot of Asia. I have a lot of Europe, but not a lot of Asia. So what I'm trying to do is 1/3, 1/3, 1/3. So 1/3 US, a little bit more exposed because of the reasons that I previously said. Some Europe, so 1/3 Europe, and all of the rest between Asia and emerging markets. So this is my allocation. This is what I want to do in 2024. So let's go right into interactive brokers, and I will show you how I buy something. I will only probably buy one thing because I have to convert francs into other currencies to buy, and I still have to do all the calculations. But yeah, let's probably buy some of these ETFs here. Yeah. So first of all, let's see how I find the ticker, because I don't trust the ticker that I find on iShares or other platforms. I trust the ISIN because it's unique. So with the ISIN, I can go into this this tool here from Interactive Brokers. This is this here. And then with this tool, it will give me the official ticker in Interactive Brokers per exchange. So right now, this ETF only has the Swiss exchange, but the symbol, so the ticker is this one, and the exchange is the EBS. That's how Interactive Brokers calls the Swiss exchange, not only the interactive brokers. That's how the exchange is. It's really called. But let's take maybe another one that's that has more exchanges. So let's take this one. I go back into this tool. I put it. I submit. I click. And okay, so here we have AEB, which is Netherlands, I think. I'm not sure. I don't remember. EBS, Switzerland, London Stock Exchange, Mexican Stock Exchange, and then this one, I don't know what that is. And how do I choose the stock exchange? Well, I choose it simply like this. I go into fees. I I put in more or less how much money I have to invest, and this gives me what is the most efficient exchange based on all of these factors. This is, by the way, all official from Interactive Brokers. I have a tiered fee structure, not a fixed one. And so, for example, right now, the London Stock Exchange would be the best. The Swiss Stock Exchange is the most expensive. The London Stock Exchange and the German Stock Exchange This is the etc. I think these are the cheapest. So if there is the opportunity, I buy on IBIS or London Stock Exchange. If there is only AEB, I buy there. Swiss Stock Exchange is only for Swiss ETFs. Which is also very bad because on Swiss ETFs, I will have a withholding tax of 35% on dividends that I cannot reinvest, and I have to wait until the end of the year to ask that 35% back. So that's also not very good. So, okay, this is the Interactive Brokers platform. This is actually not the platform that I use to buy things. I use the Trader Workstation, which is much more complicated. I did a tutorial on that, but I don't think anyone should use the Trader Workstation if they are a passive investor. This is more than enough. Or the phone also works very good, the app on the phone. But I will use this one because it's easier to explain. And I think that if someone maybe wants to buy, they should also use this one, this platform. And yeah, it's easier to understand. So what I simply do is I take this ticker here. So first of all, I just, to find these ETFs, I use just ETF or ETF.com. I search for the ETF, I put it into this Excel. I search the ticker with that tool and I put all the information here. Then I do all my analysis with all the, where is it? Well, all the weights, and I see if I like this allocation, and I look at my objectives. I say, okay, I need to be heavy on bonds or not heavy on bonds or heavy on stocks, whatever. And then I just buy. So when I'm done with the allocation, that's the moment that I buy. The allocation should not be changed. I don't plan to change the allocation for at least 1 year. At the end of the year, I might look at it again and then say, okay, my objective changed, my objective didn't change, what can we do better, what can we not do better, and all of that things. But right now, I spent about a month to build this allocation. I'm done with it. Every month, I just put the general savings from that account that I showed you previously, all the savings that I had from that month, I put it here, and then this sheet automatically tells me, hey, you have to buy 2 shares of this, 2 shares of that, and blah, blah, blah. So there is no need for me to do a lot of stuff right now. So as I said, I just go here, copy the ticker. The ticker is only this part here. This is the stock exchange. Uh, so let's buy, what am I buying? I'm buying the 0 to 3. Okay. So 0 to 3, that means it's actually not 0, it's 1 month. So that's rolling 1 month to 3 years bond expirations. Um, uh, Maybe let's see a little bit, just for fun. Let's look at this at this ETF at the fact sheet. So maybe you can also see how I look at a fact sheet. So I just open it. And then what I'm interested in is, it's in German. Nope. English. Um, what I'm looking for is on bond ETFs, well, first of all, I'm looking at the expense ratio. I'm looking at the index they follow. As you see here, it's 1 month, not 0, even though here it says 0. I look at the distribution yield. This is important for me because, as I said, we don't pay any taxes on capital gains. So it's better for me to buy a bond in general, even if it's a single bond. A bond that has a lower yield, so a distribution yield, so a lower coupon, but a lower price. So a lower coupon, but the normal yield. So this is not really good for me. This is tax inefficient because I will pay a lot of taxes on these coupons that I receive, on the dividends that I receive, and I don't gain anything from from capital gain. This also means that the ETF has inside um, bonds that are priced higher than 100 francs. So bonds are issued at 100 francs or 100 euros, anything, base 100, and on that they calculate the percentage of coupon. So if you see something like that, usually means that you are paying the bond more than 100 francs because they give a lot of coupon, but the yield should not be equal to the coupon right now because the interest rates are not that high. So what I'm interested in is the difference between these. The best thing would be zero here and whatever here. Here it's the market that decides that. Here it's the issue dates when the bonds were issued that decides this one. Weighted average maturity is also what I'm looking for. More the duration than the maturity, but here it's the duration is very small, so the maturity and the duration are very similar. Um, as I said, I need something that I can rely on, and I can rely on short-term bonds for sure. And 1.5 years of maturity, it's for me, it's a short term. This is not going to fluctuate that much with the interest rate. What's going to fluctuate more is the other one, the 3 to 7. So this one is going to fluctuate more. And I will also explain the theory behind this, behind why I do this, and behind why I'm not that afraid into investing in bond ETFs. So again, 15%, 15% expense ratio distribution. Um, Again, a good yield. Exactly. So yield to maturity 0.75%. This is a government long-term bond. These are long-term, medium-term government Swiss bonds. So this is completely normal. I know that in Europe you see a 4%, 3%, but in Switzerland, no. Um, the effective duration is more or less 5 years. It's also fine. So the theory behind this is that ETFs fluctuate with interest rates. But if you keep the ETF long enough, and by long enough, I mean at least one duration, better two durations or 1.5 durations, um, you will most likely, you have a good chance of having the yield to maturity that you were promised to when you invested in the ETF. Because as the interest rates go up, the ETF will sell other not expiring, but ETFs, bonds that no longer respect the criteria, and will buy new bonds that have uh, this higher um, yield, this higher coupon, and then when the interest rates go down, they still have those high coupons for a little bit until they no longer meet the criteria, and then so on and so on and so on. So at the end of the day, they will average out, and you will be able to find your yield to maturity that you were promised to if you invest for at least one duration, better two durations. You can do this with Excel. It's quite easy. You can simulate an ETF with bonds that enter and exit as they don't meet the criteria anymore, with different interest rates. Um, but yeah, now with expiring ETFs, it's much better, but expiring ETFs are only in euros or in US dollars, not in francs, unfortunately. Or the best thing would be just to buy single bonds. That would be the best thing because you're sure that at the expiration date you have that amount of money. And for planned purchases, that's the best way. But I cannot do that because I cannot buy Swiss bonds. Doing that with European bonds doesn't make sense. And uh, yeah, that's just the reason. So, um, okay, now that we saw these two ETFs, let's go buy one. Um, let's copy this one. Let's go here. let's go here, let's go here, and I just copy and paste that one. The ticker should directly be right for the stock exchange, but I always double check here that the stock exchange is the one I wanted to buy at. Then I look at the price more or less. This is a fairly normal thing for Swiss ETFs. Swiss ETFs are not very much exchanged. Let's go a little bit on the volume. I also choose the stock exchange based on volumes. If I see a stock exchange that it's very low on volumes, I prefer one with higher volumes because I know there is more liquidity and it's easier to buy, easier especially to sell. Today it was 10.8 and an average was 10K. Of course, there is the market maker, so you're fairly safe to be into the investment. And also here, I don't see very big gaps. I see this big gap, but it's not usual to see gaps in this ETF. It's not very good to give market orders when the markets are closed. So what I'm going to do is still give a market order because I don't want to complicate things too much. Usually, what I would do, just to explain it, I would put a stop order and a limit order to say that, okay, if it goes below a certain amount, I don't buy it. If it goes upwards a certain amount, I don't buy it. I buy it only if the opening is in between these two, the limit and the stop. Um, but right now, I think it's too complicated, and for the majority of people, it doesn't make sense. Also, one thing that one could do is just buy during open markets. That's the best thing to do. Um, but okay, 10K volume is not that much because usually I try to buy at least ETFs that have 10 times what I need to buy. And what I need to buy here is, okay, 41 shares. So it's, yeah, 10 times would be 400. That's the minimum for me. Um, but um, but yeah, still not that crazy in comparison to others. If I would show you, let's say this one would be crazy probably also because it's American. So in America you have a lot more investors. But let's look at this one, VT stock. Um, yeah, exactly, 3 million. So we have a good difference there. Let's go back to this one. Okay, let's buy it. Um, so let's buy how much? I have to buy 41. Oop, 41. Be careful about this, by the way. Always check that this is what you are expecting it to be. Let's see the preview. Apparently doesn't give me the chance to see the preview. Let's see cost impact. This should also give me the fees. No, failed to display. Maybe it's because the markets are closed. I don't know. But let's buy it anyways. Accept. A market order is an execution, blah, blah, blah. To avoid trading at the price, blah, blah, blah. For a buy order floor, for a sell, this may cause an order that would accept. Good. Dismiss. Your order is pending. So that's it. That's how I buy. Now I will do the calculations to know how much money I have to. Yeah, and so, it deleted my order. Is that possible? It so happens that it deleted my order, I think. Hey, a quick interruption. It's Dario from the future the next day, actually. I don't know what happened to Interactive Brokers yesterday, but apparently they had a problem, I think, with prices. Um, I also couldn't see the total value of my portfolio on Interactive Brokers if you go back into the video, and now it simply works. So if I go back to what was the ticker. Okay, so there's the ticker. So if I just plug in the ticker again and I choose the right stock exchange, I just go there and apparently it works. So what I do is just click buy and then put in 41 shares, um, and then check that it's shares, that it's a market order, that it's good till cancel, that these are turned off, they're not relevant. And then I can also check the preview. As you can see, this is the estimate of the commission that I will pay. This is the total amount of money that I need to make this trade. And again, this is the amount that I'm going to buy. And that's it. So I can just submit the buy order, accept the warning, accept the second warning, and that's it. If I go into open orders, I just see this one, and now I don't have any more problems. I think maybe they had a problem with the server. I tried to Google it, but I couldn't find any good answer. So I will leave you back to the Dario of the past to finish the video. One thing other that I can do to show you how I do things is to sell this this here, because this is what I had when I was at university. I just put some money that I had into this ETF, which is the MSCI World, plain simple. But now that I want to be more equally weighted, I want to discard this one and sell everything that I have. So let's go here, and yeah, exactly. I cannot buy it apparently. I will buy it when the markets are open. So let's go here and let's go AEB stock. So as you see here, for example, I have multiple exchanges. So I always check that it's the right exchange, and then it asks me which instrument from this security you want to use. Here it's only stocks, but maybe it could be options, it could be certificates, other things. I use stock always. And then I just do sell. Can I sell everything that I have? Yeah, I don't like the web trader. I have to be your account. Okay, it tells me here how much I have. Okay, because on the trader workstation, I can just say sell everything, close the position, and that's it. But okay, anyways, sell order at market, it's fine. Accept, accept. Okay, good. Also, what I will do now is calculate how much currency I need after also I sold that, and then for every investment, and then I have to wait a couple of days for the money to settle, and then I can finally trade. But then I will just go here, say francs, say the amount that I want to convert, for example, in euros. I just put the amount, submit, and that's it. It converts instantly. Okay, so that's basically it. This is my portfolio. If you have questions, you can leave a comment down below. I will try to answer. I will maybe try to do an update every month if you like that, especially for the expenses and to see how my net worth increases. Now I have a net worth of 61,000 francs. I did a mistake here because I wanted to talk about this as well. So let's talk about this briefly. I did a mistake because I have 5,000 francs in an account that I cannot touch. I mean, I can touch it, but I don't want to. And so I wanted 9,000 francs for an emergency fund that I can actually touch immediately without any problems or anything. But these 5,000 francs, I need to keep it separate because it's money that me and my girlfriend use to go on holidays and to do things, because maybe we have to go to Argentina and the flight tickets are expensive, and so we have that saving account, and I don't want to use that as emergency fund, but I mistakenly just didn't think that 5,000 francs wouldn't be touched. So here it should be 14,000 francs, but if I put that money there, then all of these are then reduced, and I already transferred the money on interactive brokers, and I don't want to transfer it back. So for this month, I will keep it at 9,000 francs. Then when I transfer all the money that I saved from January into this sheet, I will increase a lot this one. I will then put 14,000 francs or 15,000 francs just to round it up, and then probably it should equal itself. I did an estimate, it should equal itself. That means that I should not invest anything. But even though even so, even if I theoretically should invest something, I wouldn't, because I need to wait maybe 3 months to accumulate some money so that I don't have to pay so much fees when I invest. That's it. As I said, if you have questions, the comments are down below. You can leave the comments. I will probably post this Excel sheet so you can use it. Here, it's all the exchange rates for the currencies. It's all automated. This is all automated. Um, this is the allocations that I have for stocks, bonds, cash and others, and taxes. Um, so yeah, that's it. Thank you guys for listening. Thank you guys for watching. And I'll see you probably, I don't know, in the next video, maybe in 1 month, maybe before, who knows. Thank you for listening and watching. Bye bye.